Good morning, traders. It's Mark here from the day trading room. The time is quarter past 11 in the morning, London time, Wednesday, 22nd of September, and it's post Fed Day yesterday. We had the FOMC meeting, which is what everyone was waiting for all day long. Now, I don't think I've ever in my maybe I have, but I can't recall a time when I've ever seen such a shallow range in the YM. We had a 27-point range all day long until we had the Fed meeting. Now that is absolutely diabolical. So what did we get up to? Well, let's run through some of the trades. I thought we may start probing. The premise of off the open was either to probe the overnight high, which was 10,700, maybe yesterday's high, and or to probe this support level which happened overnight with the 10,660. Not much in it, but potential for a quick scalp. So we watched the open, and it started to probe lower, failed there, and so as we pushed back into here and we realised we weren't going to roll over, we took a little long. The market pushed up 6 or 7 ticks, pulled back, and it just pulled back too deep for us, and we took a loss on that. So first trade was a small loss, but that was it. We decided then that there's no point in getting involved in this absolute chop. I was loath to sell probes into the range just in case we did, start to extend a little bit and tag these targets. And I didn't really want to either take any breakouts because of the nature of the market and the fact that the volume was just so low. Went into which waited until the Fed decision was coming. With a small loss on the books. So Fed came, and boy, what a fantastic Fed day action it was. This is the sort of stuff that we wait for. We wait for weeks for this sort of action, and then when we get it, we want to get as aggressive as our trading plan allows us to, and really push home those trades. And that's what we did yesterday. We really got on the end of some great trades. Two trades spring to mind as really the day makers, and this was along at this point here. Well, after we'd probed lower, it was a little bit unsure what was going on. Pushed higher, we'd push lower to this support level of 10,654. We pushed back up, and then we attempted to push lower on this candle here. You can see here, but when you've got that situation where it's a spike lower, it's not a genuine spike lower. It's just, when I say genuine, it's not a concerted effort by sellers to push the market to new lows. It's not been repriced lower. It's just, the algorithms and the computers just responding instantly. Market orders hitting a thin bid, and that's what you get. You get these spikes. So what you're looking for is the subsequent action after that. After the initial spike, you want to see where the actual market wants to move to. And so we had this spike lower here, this candle. Then we had this candle slightly spike lower, but then we saw some good tape strength. And this is so important, why reading the tape can really give you that extra edge, because at this point it was unclear whether the spike lower was just a spike based on, as I say, market orders hitting thin bids, or if it was a prelude to what was going to happen subsequently. And so this second and third candles, we are watching the tape like an absolute hawk. And a little bit of a clue, we did get a bit of a volume burst here as we started to push up, and you can see that on the tape. You can see the volume coming in, you can see the offers being hit, you can see bids coming on, decent size orders coming on the bid, offers being hit, and so on and so on. Little pauses, very small pauses, but when you see that sort of action, you see speed, you see good bids, then that's your buy. And so we went long heavily there, and we added as we saw the tape was just so good and had potential here, because we've been in such a tight range so long all day. We had potential to really squeeze a lot out of this trade, and so that was it. We got a good long around this level here. Add into the trade, maximum size, bang. Normally take my first scale out, excuse me, at plus 10, but rules change when you've got a reprice. Taking 10 ticks from a move like this, is silly really, because there's potential for such a large move. And so my first scale was 26 ticks, and I took off half the position for plus 26 ticks. And then I started to scale out. I took another off at 19, another off at 25, another off at 30, and held a last batch to see if we could get a little bit of a runner. And in fact, I held that while I looked for my next trade. And my next trade was the classical trade, which, if anybody's been looking at the videos, the previous videos I've done, you'll know I like to take a couple of trades. There's a couple of setups I like to do. The first is the initial pulse, pullback buy. The second is the slightly deeper pullback to the 20 period moving average. I don't often use moving averages, but on trend days and on reprices where the market is moving away from its mean level and pulling back, it's a good little indication of a place to get long. So that's exactly what we did. We pulled back, and we pulled back to this moving average, bang, so there was our long. We already had a small position long from before which we wanted to hold and trail, but we're now looking to get aggressive again for another scalp, and that's exactly what happened. We got the pullback here, we took a little bit of heat on it, not a lot, and then we pushed up. As we pushed down this little red candle here, I thought, oh, perhaps we're going to have to take a bit more heat on this, but as long as it stayed anywhere really between that moving average and this 50% of the move is a buy. Really, if it starts going below the 75% of the move or the 25% of the move, depending on how you look at it, then that's where you want to get out. So you've got to be prepared really for it to start going against you a little bit, which is why the best strategy is to scale in. Take a little position there as it's going your way, scale in, be prepared to scale in here, but ultimately, know where your risk is, and if you decide that's going to be under there, then that's fantastic. You probably could have got away with it under the open level here being a reasonable level of resistance, but whatever you choose, you may have to scale in. But again, that's why tape reading helps you so much, because you can see when that buying's coming back into the market, and then just jump on it quickly and try and get your move. So that's it, we jumped on that. Got a lovely pop. As usual, I always take some off as we probe the high, because you just never know if it's going to come back for another push lower. Really, the actual move wasn't as significant as I'd liked. I'd like to have seen it well up here, but it's still strong relative to the range of the day. So we've got a little pullback. We've got our long, and we took some off here. It was about just before that high, and then we trailed the rest. And at this point here, I'd hold it all the way through this. I was scaling out very, very small amounts just to make it. I like to feel as if I'm actually doing something, and even if I don't get the majority of the position away, if I can just get a few contracts away, a small part of the position as we're pushing higher, I feel as if I'm actually doing something, and it helps me psychologically. It may not be suitable for you. You may want to scale out in larger batches, but I prefer to do that. And so really, I had the full position on still, apart from this scale. Obviously, I still had a large position on, should I say, as we pull back to the moving average again. Now, I'd expecting one more push. Really, you've got one deep pullback, you've got two. You'd normally get a third push, and really I'd be looking, if we probed the high there and failed, to take it all out there. But what happened is we pushed higher, and then we just started to get lower. The ticks started to not come up so high. We got that divergence in the ticks, and I just thought, I was really thinking that we'd get a good 100 tick runner here, if I'm honest. We didn't get it, and as soon as this low went, I just decided to ditch it, because I thought, well, the ticks aren't, the volumes, the strength isn't as strong as it should be, and I just don't like it. I can always go back in on a deeper unwinding, as the day goes on. So that was it. That was our trades and Fed day. Really good first trade. Fantastic scalp trade there. 30 ticks on the best and 26 on the majority. And then again, we held a small position and re-added to the position on this little pullback to the moving average, scaling out onto the highs, and then we didn't get quite the move that we'd hoped for, but we still got a nice little profit on that trade anyway. And so apart from that, one more trade in the day we'll run through very quickly. which was half-size trade. After you've got aggressive with that, you don't want to ruin the day by doing something silly. And it did look, as we curled down here, that we had potential that we were going to take out the lows. And so as we'd pull back to this 10,700 level, I was just waiting for this little snap back. We just got short there. Great little entry that was. It was right on the button. It was a good call. That we're waiting for that pullback, and we did get our entry. Sometimes you don't get it. We got a push down. We scaled out some there, and we scaled out a little bit more there. We held a runner looking for a push into the close. Didn't happen, and we just got stopped out just on that little pop up above our entry. So another nice little trade. I was just looking for that little runner. We didn't get it, but you've always got to be aware that you could potentially get hold of a really good move. So it's worth doing. So that's that. Let's see what happens today. We're still in relatively bullish mode in the markets. It's pushing higher. As I'm looking at the moment, we're only down 3 pre-market. So yeah, it's going to be interesting. We've got some levels to work off. Of course, yesterday's highs up there. I'm probably going to use this as a good level, and I'm going to use this 10,700 again today to look at. And the low of yesterday's range will be yesterday's pre-Fed range will be interesting. So good trading, guys. We're back again with another video. As always, please rate the video, please comment on the video, and you can email me directly, mark@TheDayTradingRoom.co.uk, or visit the site www.TheDayTradingRoom.com.